Good afternoon, everybody. Thank you for attending to today's webinar. We are excited to provide some additional information as we are all adjusting to what we call new life and our new normal. And with that, we want to continue that with giving you some information on the CARES Act. If you were on the webinar last week, we talked a little bit about the stimulus and what that meant for individuals. And today we're going to focus more on what that means for small businesses. So with that, I have Ed B. Miller, one of the partners here at Keystone Financial Group. And Ed has worked with a lot of small businesses and helps a lot of our clients that are small business owners. And Ed is going to talk a little bit about the CARES Act, the Paycheck Protection Program, and he's going to get into what that means. Hopefully some of you have already applied for the SBA loan, but if you haven't, Ed's going to give some information on what that looks like. So Ed, with that, thank you for giving us that information, and I will let you take it away.
All right, thank you, Brian. Appreciate the introduction, and appreciate everyone that's online now and listening to this. The goal today was really to provide information to anyone out there, and these are uncertain and unusual times, and there's a lot of benefits that are available out there to a small business owner, and the classification of small business owner is extremely large. I mean, it could be a sole prop, an independent contractor, 1099 contractor. Those all classify. Now, I think a lot of people don't realize this. A lot of people think they have to have, 30, 40, 50, 60 employees. So what I'm going to spend time on today is really going over basically a provision within the CARES Act, the Coronavirus Aid, Relief, and Economic Security Act, and there's a specific program, the Paycheck Protection Program, which is and can be extremely beneficial to small business owners. And then I'm also going to touch a little bit on another program that's actually been around. They just kind of expanded it with this pandemic going on currently, which is the Economic Injury Disaster Loan and Grant Program. So we're going to cover a little bit of information on everything. Here's for those that have not met us, these are the people that get things done, especially the two ladies up front, Rose and Tina, help keep the three of us in order and in line and get things done for our clients. So we definitely greatly appreciate, and they are home as most of us are working virtually. But without them, we definitely could not achieve what we have achieved in the past and currently. So let's get into the Paycheck Protection Program. There's some general information. This is part of Phase 3 of the CARES Act, and the government within this program set aside $350 billion in new loans and grants for this program. Now, what's very unique about this is these dollars are forgivable. So when I say loan program, it's, if you've heard the term forgiveness loan, if used properly and for the right expenses and costs, 100% of this is forgiven, meaning it is truly a grant to your company. This program is administered through the SBA, the Small Business Administration, and it actually went live April 3rd, and it went live for a grouping of business owners on April 3rd, which included basically C Corps, limited liability companies, and a few other classifications, and then last Friday, April 10th, it went online for sole props, independent contractors, and the rest. So anyone listening to this, it is now fully open for any small business owner. The June 30th is basically the last date or the end date of the program as far as accepting new applications. Something that's very important, this is a first come, first serve, which means in the accounting world, using GAAP principles, generally accepted accounting, this is FIFO, first in, first out, which means time is very important here. You need to get this information in, get these applications into the process to make sure that there are funds available. There's already been talk, and President Trump has come out and made statements about potentially adding another $250 billion to this program. Now, whether or not that happens is up in the air, given our bipartisan system. He's already getting some pushback from the Democrats on increasing the funding for this specific program, but we'll see how that plays out. Who's eligible? The classification is any small business. Small business is basically defined as 500 or less employees. So that is going to cover the majority, probably about 97% of all corporations in the U.S. fall within that category. Other companies outside of more traditional, even the nonprofits, a 501c3 with fewer than 500 employees. A tribal business concern, once again, that meets within that employee level. Also a 501c19, which is deemed a veterans organization. And then they also expanded the qualification to allow for some, hotel, motel, so the accommodation and food service business, in which you may have a single owner of a location that's part of a much larger corporation, but as long as you're under that 500 employee rule per location, you'd be able to qualify. The loan is really intended to provide capital for the next 2 months, for basically an 8-week period. So how the request or amount is calculated is you have to do a calculation of your last 12 months of your average payroll, and the application allows you to submit an amount equal to 2.5 times that. So whether you have a W-2 employee or a 1099 employee, it doesn't matter. They all qualify for this. Could be a part-time employee as long as there was earned income on a trailing 12 months. One of the distinctions, if you have HCEs or highly compensated, which would be a salary or compensation in excess of $100,000, the program is capped salary to $100,000 for any one individual employee. So the maximum benefit that you could basically declare for any one individual employee is $8,333.33 a month, which is just $100,000 divided by 12. So if you have someone that's making $150 or $200, the most that you can set aside to be forgiven, is that $100K or $8,333 a month. The other unique thing about this, instead of just the employees, the owners of the company, also qualify, once again, up to that cap. So you can include them in the request. And another unique thing about the program, the emergency disaster loan that I'm going to go into, some people have already applied and gotten approved and maybe even gotten funding on that. And that was kind of previous to this PPP loan coming out. So you're actually able to roll in the balance if you did get one of those loans into the PPP program so that more of it can be forgiven. So that's something else that's out there. We spoke a little bit about what can that loan cover. The loan can cover, first and foremost, it's meant for payroll costs. Once again, the calculation, you take the average of the previous 12 months for each individual employee, up to the cap that I previously spoke about. Any costs related to continuation of group health care benefits for those employees. Mortgage interest payments. So if your company basically has a building and you have a mortgage debt on it, you can basically apply the mortgage interest payments within that calculation. You cannot pay principal on that loan, nor can you pay prepayments of that loan going forward. So it's not like you can prepay several months on that. You can also pay interest. Once again, we're hearing this interest on any other debt. So let's say you had term debt or equipment loan or something else on the books. The interest on that debt, as long as that loan was in place, incurred before February 15th of this year, can qualify under that program. And then another pretty large category for most small business owners, it falls under the rent or utilities. A lot of small business owners don't own their building, they rent. So that whole amount of the rent can be utilized within this plan. And then the utilities, electric, gas, water, transportation, telephone, or internet. So all those things can be taken together. Now, once again, kind of the qualifications for this to be forgiven. A maximum, basically 75% of the loan has to be used for direct payroll-related expenses. So if you have a huge rent and all these other utilities, you can only use 25% of that total loan, which is, the 2.5 times your payroll, can be used for any expense outside of payroll for it to be forgiven. It doesn't mean you can't use it. You can use it, but if you do use it more than that 25%, the amount above and beyond that 25% would not be forgiven. It would basically fall into a loan, and I'll get into that here in the next slide. Another very unique thing about this, most small business owners, when they hear the word loan, they're like, listen, I mean, we're enduring hardship, sales are down, I have to, furlough employees or even, basically lay employees off. I don't want to incur more debt during this time. So that's why this program is very unique. It takes no collateral. You don't need any collateral, no personal guarantees. No one's going to, they're not looking at your financial statements to determine if you're eligible or if this is a viable loan. None of that comes into consideration. This loan is also 100% guaranteed by the U.S. government. So you do not have to worry from that standpoint. This is guaranteed by the government, not you individually. If any of you are familiar with other SBA loan programs, they typically have anywhere from 3 to 5% origination fees up front. This has no loan fees as part of the program. And as I had mentioned previously, the loan really is meant to cover a period of 8 weeks of eligible expenses from when the loan is funded, not from when you applied, but from when, if you get approved and go through the processing, once that loan is funded, basically the clock starts ticking, and you're 8 years or 8 weeks from that time period. Now, what happens if you use that loan/grant and more than 25% is used for other expenses, other capital needs? You can do that, but then it becomes the amount above and beyond that will turn into a loan. So the bank that you basically went through, this program, you have to go through a financial institution or bank as far as submitting the application. And for whatever is not forgiven, that will turn into a loan. The loan will incur or have an interest rate of 1%. It will have a maturity of 2 years, and that is after the 8-week period. And payments can be deferred up to 6 months. So given the economic times, if there is hardship and everything else, and you just can't afford any payments, you can defer them 6 months. The loan will continue to accrue interest, but you just don't have to make payments for up to 6 months. When we look at this, who to contact? First and foremost, the easiest thing, if you are a small business owner out there, and whoever your bank is or where you have your depository accounts, maybe you have a small lending relationship, that is first and foremost who I would recommend that you get in contact with. More information, you can go to the SBA website, which is www.sba.gov. And this is another important, basically, website here, as I said, because the applications have to be submitted through the bank. If you go to this website, which is the HTTPS, I'm not going to read all that, but COVID-19 relief. If you type that in, you can get a list of the approved financial partners, which would be banks, savings and loan, or whatever, by zip code. So depending on where you live, basically you can just type that address in and find out, lenders in your particular area that you can go through. And the biggest thing to me, and what we're telling our clients and my clients, Brian's and Ryan's of Keystone Financial, any small business owner, any sole prop, independent contractor, this is a great program, and you need to look into it. And it's very important. Timing is everything. don't put this off a week, 2, 3, 4 weeks, because there's a high probability that the funds available for this will run out. And even those that, I keep reinforcing this, independent contractor, doesn't mean you have 3, 4, 5, 6 employees. It could just be you. You don't have to have a bunch of employees. Once again, participation's high. Do not wait. You can contact one of us if interested for more information. We'd be happy to provide that for you. Now, next basically program, which I had mentioned before, which is the Economic Injury Disaster Loans and Grant Program. Now, the Economic Injury Disaster Loan Program, also referred to as EIDL, within the marketplace. This program has been around for some time. Now, what they really did was expanded this program as part of the CARES Act. And the part that was expanded, this was strictly a loans program previous. Now, they set aside as part of the act $10 billion, which will come in the form of grants. Now, each individual loan is basically the maximum amount of the grant is $10,000. So that is truly a grant that does not have to be repaid. The coverage period on this is January 31st, 2020 to December 31st, 2020. So it's basically this year. So unlike the PPP program, it's not like, all right, there's only X amount of dollars set aside. This is a more traditional program where effectively at any time through this year, because there's a great deal of uncertainty. We're not sure how long this is going to go and what the long-lasting economic and financial impact is going to be on each of the companies. And the qualifications, this is a little different. This program has a maximum loan amount of $2 million. The interest rate is 3.75%, which is a very low interest rate for small business loans. If you are a 501c3 or nonprofit, that interest rate is 2.75%. You can actually defer payments, so no payments for up to 1 year. And the amortization or maturity on this is up to 30 years, no prepayments associated, but you can basically turn that out over a much longer amortization to help with cash flow and liquidity. Another very unique part of this program, if you do apply, the grant portion, the $10K, is actually made available within 3 days of the application. Now, here's the thing too. You can actually apply for the PPP and the EIDL, this program together. But the reality of it is the PPP program has certain things because of the amount that can be forgiven that the EIDL doesn't. And so we are typically encouraging to look at the PPP program first, and then for more, if more capital is needed and there truly is more of a longer term impact, looking at this program from a debt standpoint. The other very unique thing with this program is if you apply and for whatever reason, if you don't meet the qualifications, which I'll get into here in the next slide, you are turned down for this, you still get to keep the grant of the $10,000. So that's something else that's very, once again, kind of unusual, with this. Now, this program, unlike the PPP, where you really don't have to show any hardship or, any real financial data to merit anything, meaning there's really no qualification outside of having employees or just being a corporation. This one, there is qualification. It's really, this program is geared towards businesses that have or are experiencing economic hardship due to the current pandemic. And that basically is defined as a couple different things. You have fully or partially suspended your operations as a result of orders from a governmental authority due to the current pandemic, or if you've experienced a significant decline in gross receipts, once again, which is defined as your gross receipts or sales are below 50% of the comparable quarter for 2019. So there is qualification with this. There's also some structure within this. No personal guarantees on the PPP. On this program, for anything over $200,000, the owners will be asked to personally guarantee. This program your application can be submitted directly to the SBA online. So you can just go to that same website that I had up there before, www.sba.gov. As I had mentioned before, it can be used in conjunction with the PPP program, and you can apply for each of these programs for each business you own. I know there's probably people on the line or people that you know that own multiple businesses. So each business can apply for a loan or can apply for one of these programs. Some of the things from a general working capital, what this idle loan can be used for, what it can cover: paid sick leave due to the COVID-19. So you have employees that actually come down are diagnosed with COVID, with the virus. This will help pay them and keep them getting paid, maintain and retaining payroll, increased costs of maintaining materials due to interrupted supply chain, which we're seeing a lot going on in the current environment. It could also be used for your rent or mortgage payments. On top of that, repaying obligations that cannot be met due to revenue losses incurred, once again, as a result of this pandemic. One thing it cannot be used for, it cannot be used to effectively pay down long-term debt. So you can't refinance a loan that you have at 7% because this is lower rate. Once again, there has to be hardship associated with it. Now, so those are the two main kind of loan/grant programs. Some of the other things that are out there, and I would tell you, for these, I would definitely consult with your CPA or your accountant to make sure whether or not you would qualify for these things. But some of the other benefits that are part of that CARES Act, there is an employee retention tax credit. And this employee retention credit is a fully refundable tax credit for the employers. Once again, for retaining your employees. It's going to equal to 50% of the qualified wages that each eligible employee is paid by their employer. And this credit will apply to wages from March 12th of this year all the way out to January 1st of next year. Now, specifications within that basically say that with the wages taken into account for each employee, the maximum amount is $10,000, and then they're going to take 50% of that as an allowable credit. Once again, I'm going kind of a 20,000-foot perspective here, so I highly encourage you to talk to your CPA or accountant to see if your company would be eligible for that. Okay, next, who are the eligible employers? Those that carry on a trade or business during the calendar year of 2020. So pretty much anyone that was in business. Other qualifications, you fully or partially suspend operations during the calendar quarter in 2020 due to orders, which I had mentioned before, from the government, which, a lot of, whether the state or federal governments are putting restrictions and putting classification in as far as who can and cannot work. So it's important if you do fall within one of those categories that there is relief out there. And then, as I mentioned before, also for if you do experience significant declines in receipts and sale revenues. Some other benefits that are out there. CARES Act allows all employers to defer payment of the employer's Social Security taxes that are owed for wage payments made after March 12, 2020 through the end of the calendar year. So those payments that are normally made can be effectively deferred out. You have to deposit due for 50% of the taxes. It's deferred through the end of the year. Actually, end of the year, December 31st, 2021. And then the remaining 50% was deferred until December 31st of 2022. Once again, I can't say this enough, all employers need to work with their tax advisors, payroll providers, payroll departments. If you think this could be a benefit to you, because this is something you can immediately put into effect. And as I said, only possible exception to this if you are a company is if your company applied for one of the programs that I had previously mentioned and actually were approved for it, because this cannot be used in conjunction with one of those programs. So it is more of a either or as opposed to all encompassing that you can use all the programs together. Another thing for businesses on the interest deduction, as part of the CARES Act, the net interest deduction limitation has been amended. Currently limits businesses' ability to deduct interest on their tax returns to 30% of the earnings before interest, which is 30% of the earnings, basically 30% before EBITDA, earnings before interest, taxes, depreciation, and amortization. That 30% has been expanded to 50% for 2019 and 2020. This is going to help, once again, the intentions of all these programs, it's going to help businesses with cash flow, increasing their liquidity, retaining employees, making sure the debt is manageable. Taxpayers may also elect to use their 2019 adjusted taxable income for determining their 2020 interest deduction limitations. So these are bits and pieces, something we felt was very important, especially for our small business owners within our clientele, whether you're a current client or a prospect. This is information that's out there. A lot of people aren't familiar with it, and that was really the purpose of today's webinar. Once again, if you'd like more information or you need assistance with this last slide, we are available. Myself, Brian, or Ryan would love to talk to you. You can call into the number 614-300-9498. That's going to bring you into our home office. Although we are not physically here, we're not open for business. Everything's virtually. We do check emails, voicemails, appointments are being scheduled. Rose does a great job. We have her working from home, but she's on top of things and putting a full day in. So with that, once again, I greatly appreciate you guys spending the time with us today. We're happy to have you as a client, or if you're a prospect, we'd love to get you as a client, and hopefully some of this information helps you along the way. So stay safe, stay healthy, and until next week, take care.